Guys, today is the 17th of May 2021. Hope everyone is doing well. So this is the daily forecast, and on my right side you can see that these are the weekly forecasts. The weekly focus for the week. And so we're gonna start off with the first one, euro against the US dollar, which I have did a weekly forecast on it as well. So right here, this is a day chart. So what I'm seeing for euro dollar this week is that it is currently, as you can see, is trading within a rising channel, within a very major one. So technically speaking, we are seeing a very bullish euro against the US dollar. Last week was a bit range bound, but there was a support on Thursday, and on last Friday it actually rebounded off and it turned pretty bullish. So this week the market has opened. Today is the very first day of the trading week, and in the 4-hourly chart we are seeing some sort of resistance, which is very understandable, because obviously this is a supply zone, a previous support turned resistance area. So expect some resistance, some pullback before it continues to goes up. So in the 1-hourly charts, the thing is that this week we don't today itself there isn't much news in the first place. I mean, let's just take a look at the Forex Calendar. I'm pretty much used to use forexfactory.com since many years ago, but there are a lot of other sites that actually show it as well. Now let's apply to all currencies. As you can see, there isn't much for the euro, except for on Monday there's nothing at all actually. Right, so there's nothing important at all in terms of the economic data. So today is going to be very volatility is going to be low, so we do not have to, we are going to expect low volatility in this case. So we'll just wait patiently. Since there is already some resistance, we can expect the price to pull back. So when it pulls back, all right, from a previous trend, usually what I like to do is pull a Fibonacci from the swing low to the swing high, and I will always observe two things. One is I like to observe the 61.8%. There's no need for me to explain why the 61.8%. When we're using Fibonacci. So if it pulls back, if it gets very closer to 61.8%, or when touches the 50%, I think that's where I will start to decide whether to buy or not. And we can see that this is also a pretty good support, a resistance and support level in the 1-hourly time frame. So it's a very minor support, but just a little bit below we have the bottom of the rising channel. So there is a lot of confluence right here. So today itself, I think we will just wait, hopefully, as it reaches this level. Now I think the first thing we can do, or rather what I will do, is as it reaches this, you can see that the trend went up, it pulls back, and then it rebounded off from this level, which is already at the previous resistance and support level. So it's very nearby. So when the price reaches this level, there is a good chance it might start to go up. So you can always enter a partially, all right, buy partially rather than the full lot, and see if it will push back further. It may go up right away, and if you dip a buy right here, at least you don't get to miss it. Or if you want to be really conservative, you just want to wait for the best price, I would say that somewhere 1.2098, this region will be the best price for you to buy, but chances are sometimes you won't reach that level based on my experience. If a trend is strong, usually it don't pull back that much. Alright, so even at 1.2110 might be a bit hard to reach. So in any case, that's where I'm looking at to buy today, or maybe by tomorrow. Let's see how it goes. And next we have the Aussie against US dollar. Right, so I'm going to go a bit faster, taking too long for the euro against the US dollar. Now, for the Aussie against US dollar, again, I have a forecast, all right, over the weekend. So you can see very nice rising channel, supported at the bottom and rebounded off last Friday. Expected to go up further, and one of the reasons that I actually gave on the fundamental side is that rising inflation, which causes commodity prices to go up, and Aussie, as most should already know, is a commodity currency. Right, we understand that why inflation is coming. We understand that as commodity price, as inflation rises, commodity prices rise as well, or the other way around, commodity prices rises, inflation does rise. Either way, this is going to contribute to the bullish momentum for the Aussie. So since there's already a rebound right here, right now, of course, we are also seeing that the price is pulling back, right back to this level. So hopefully it comes to this area, a pretty nice demand zone, I would say. You can go, so maybe when it reaches this area, right, you might want to consider the buy if there's any reversal. Otherwise, a little bit lower, right, to this region, and of course, right at the bottom of the rising channel. Alright, as you can see in the day chart, this is a year, more than a year. Alright, this rising channel has been around for more than a year. So, well, I'm not sure if the commodity price is a little bit too overheated right now. If it's too overheated and there's a pullback is very strong, and especially the COVID situation right now is started to turn bad again, turning sour. So that may actually cause commodity prices to pull back a lot more than what most would the market has expected. So it really depends, but in the shorter time frame, as long as this structure is still is not broken, price doesn't break below the support right here, or if I were to give a number, if price doesn't break and close below 0.77, we should still go for a buy for the Aussie against dollar. We should still be expecting the commodity prices to rise, and therefore Aussie to continue to rise as well. All right, so right now you can see there's some support already. I mean, do your own analysis. I've given you the price. Just watch out and see what you want to do with it. And furthermore, you might want to take note that this falling trend line has been broken as well. So this is really in my opinion, is a very good price to buy already for Aussie against US dollar. Now next, I want to talk about gold. So gold, I did a weekly forecast as well. I'm expecting the gold to be very bullish. Again, commodity prices rising, inflation. Gold always do well during inflation. So definitely, I'm always looking to buy gold. So let's come and take a look at the charts right now. As you can see, so it opened low this morning, and just shoot all the way up till now, reaching the resistance level at 1856 right now. So where is this level? It's right here. It is what I call an equilibrium. Why? Because this is where a very strong support has been broken and it turned bearish, or rather is actually the balance between the buy between the highest price and the lower price, which is why I call it an equilibrium. I mean, that's how I understand it. So maybe we'll expect some form of a resistance right here. But if gold were to really if gold is really bullish right now, chances are this level will be broken very easily. There might be a little bit of whipsaw here and there, but eventually it will break up very fast. So well, of course, we are not going to chase. I never chase the market because the risk will be will be a lot higher as compared to the reward. So risk-reward ratio will not make sense. We just have to be patient. And so right now, all I can do is to wait, right? Wait for the price pull back, hopefully back to today's low, retest this level, and we try to go for the buy. This is a very good level already. I mean, obviously resistance and support level. Nothing much to explain. Very simple price action. Alright, so I'll just go through these three pairs, and I'll see you guys again tomorrow. I hope I can do this on a daily basis. Alright, see you guys.